15 Wall Street firms now trimming their price targets on FedEx stock this morning after the company cut its outlook for the third quarter in a row. Our Frank Collins has been tracking the action. Frank, how much of this is a macro story that's hurting FedEx?
Well, that's really the question. Is it a macro story? Is it a FedEx problem? A lot of signs are pointing to it's a macro situation. So let's get to what you were just talking about. The flurry of price target cuts is in response to FedEx missing on EPS and cutting revenue and EPS guidance for the current quarter. But also the fact that that lower outlook does not include the potential impact of tariffs that began on April the 2nd and just that potential disruption. So if you take a look here, you're going to see a range in price target cuts. Citi, kind of a minor one, from $317 down to $305. Cowen, a much deeper slash from $377 down to $310. FedEx making the case for cuts themselves really on the call, citing a challenging environment overall and specifically weakness in the U.S. industrial economy that really impacted the freight division. But you may notice in many cases the stock's holding on to a buy or an overweight rating. Loop Capital, really a notable exception there. Analysts from Loop moving FedEx to a sell due to recession concerns. They say in part FedEx is a really bad recession stock because thin express margins amplify the earnings hit whenever there's pressure on the top line. It's not one you want to go with if things go south. However, Citi points to the relatively low valuation for FedEx as a reason for maintaining the buy rating.
FedEx is a cheap stock, and it has been cheap for some time. And so for us, as we look at kind of where do we go with the stock in terms of our advice to investors, we're continuing to say, look, it's a buying opportunity, but you're probably going to have to wait some time to see that play out and to see that earnings growth reaccelerate.
So keep in mind, FedEx also guided for weakness in the first half of its next fiscal year. Right now, we're in the last quarter of this fiscal year. Currently, estimates have EPS growth at 16%. Analysts say that number will likely move lower, which again puts some pressure on that valuation argument. Sarah?
Okay, Frank. Thank you very much. Frank Collins on the